Hey guys, and welcome to the Working Money Channel. There's so much going on in my head right now, I can't even keep these things straight. Ashley Prosper here on Twitter posting this. March 21st to 23rd is going to be a very interesting time. As you guys can see, even just over here, what is happening today, what's trending on Twitter, ISO 20022, this is one of the things that we are anticipating this coming week. So ISO 20022 goes live, possible Trump arrest, which kind of came out of left field, or did it? We've got potentially more banks collapsing, a possible end to the Ripple case, Paris Blockchain Week, and the FOMC meeting. Lots to keep track of, guys. We've got XRP here on the move. As of the time of this recording, just within the last few hours now, we did see XRP move about 3.75%. It has come back down. It's trying to reach that 40-cent mark. Just to give you guys some context here of what Bitcoin was doing within that same period. Bitcoin went as high as about 1.2% and is now trading down a bit at about 0.74. So XRP, in comparison, has been seeing quite a bit of a move. Don't know if it is related to, all the things, the culmination of these things. I've got Neil Hartner here posting this for all the ISO 20022 fans. Please enjoy binge reading the RippleNet payment objective documentation, which uses ISO 20022. Now, as we know, there was this misconception, and I got to admit, I was even guilty of it at the beginning, that there were coins, specifically ISO 20022 compatible. And, at that time, we were talking about XRP being one of those coins, Algorand, XLM. Fast forward to today, and now we know that this is a messaging protocol and that no coins are actually compliant. We know that Ripple as a company did, or they were one of the first ones that decided to join the ISO 20022 standard, and so that was years ago now. Well, here, guys, we have Standard RippleNet Payment Objective, or the SRPO. So they have now documented what RippleNet members are doing with a framework for sharing data for other members during the payment process. The Standard Ripple Payment Objective, or the RSPO, is a set of fields that must be specified by RippleNet members while sending payment information. These fields are a subset of fields available in the supporting info JSON schema. The SRPO field provides sufficient data to meet the information requirements of members in most payment corridors to process cross-border payments. So they're coming out here and basically outlining what these Ripple partners have to do, RippleNet members, in order to be able to process via ISO 20022 standards. Standardizing the supporting information exchanges between RippleNet members enhances interoperability and facilitates quicker integration when expanding into new payment corridors or connecting with our new partners on RippleNet. The RippleNet Payment Object Supporting Information Schema aligns with ISO 20022 PAX.008 message formatting. As such, each property of the JSON schema shares the same naming conventions as the equivalent ISO 20022 definition. The framework that aligns with ISO 20022 enable interoperability with the variety of RippleNet members and their back office systems. So that is what's going to get these RippleNet members, fully integrated with ISO 20022 following this messaging system. And they've even given it a name specifically for RippleNet members, SRPO. There's some more information down here, and I will link this, guys, in the description of the video if you're interested in RippleNet and 20022 compatibility. To give you guys a bit of a sense of what the JSON file format is, because down here someone was asking, veil lifted. Okay, I'm not well versed in this field, so correct me if I'm wrong, but does this say that they are using a messaging format that mimics or is equivalent to ISO 20022. I read it and reread it and have proven to myself that I know nothing of what I read. And Neil Hartner says RippleNet Payment Objective is compliant with ISO 20022, but the standard is pretty flexible, which is nice. For example, the previous ISO 15022 didn't support XML or JSON. And then Future Hillionaire down here saying, too long did not read. Neil Hartner basically distilling it down in a nutshell, there will be JSON. So just to go back to that, it is an open standard file format. I think those who program will probably know this. File format and data interchange format that uses human readable text to store and transmit data objects consisting of attributes, value pairs, and arrays. It is a common data format with diverse uses in electronic data interchange, including that of web applications with servers. So it's just for messaging and storing data. And Ripple has given us basically how that is going to integrate with ISO 20022 for their RippleNet members, and even giving it a name, the SRPO, Standard RippleNet Payment Objective. So it's all sorted out here. Wanted to thank Neil just for bringing that thread to our attention. Of course, guys, this is a huge integration, ISO 20022, and 2023, the year the train is about to leave the station. This from Emily here on Twitter. Of course, we've got SWIFT worldwide and the migration of the ISO 20022 standard, cross-border payments and reporting, which will affect financial institutions using SWIFT. We've got the European Commission, also March of this year, delivering cross-border payment pilots for European Commission's EU Digital Identity Wallet. We've also got the Central Bank of the UAE launching an instant payment platform to facilitate financial transactions in the UAE. That is happening before the end of first quarter 2023. In April of 23, the Japanese government allowing companies to pay salaries digitally through money transfer providers, and not they specify here not crypto specifically. Of course, mid-2023, July, we're rolling out the Fed Now service in the United States. Autumn 23, finalizing the design of the digital euro, that coming from the European Central Bank. Bank of Indonesia, still to be announced. 2023, connecting cross-border payment systems with 5 other Asian countries. And then the clearinghouse, EBA Clearing and SWIFT, in 2023 as well, launching a real-time IXB cross-border payment link between the US and Europe. So guys, a lot of things coming down the pipe. Of course, many are assuming this is because we are now in the midst of this financial crisis, a banking crisis, as has been trending over the last few days. And Rich Dad, Poor Dad also commenting on this in a recent podcast. This is from XRP Crypto Wolf here, bringing up the You Today article. Robert Kiyosaki, a prominent investor who made a fortune in real estate from the Rich Dad, Poor Dad books, as you guys know, believes that the financial crisis is in fact getting worse. He says more and more dominoes are falling, caused by the crash in the banking sphere, as large banks have been going bankrupt one after another. By now, 3 major U.S. banks have gone broke and are closing down, and he lists the 3 ones that we've been talking about over the last week. Curiously, though, all 3 banks had actively worked with crypto exchanges and stablecoin issuers such as Paxos. If we go down here, he's not giving any predictions as to who he thinks the next bank will be, but he did warn of a crash and crisis. We're just getting started, he says. Pensions, IRAs, 401ks went broke and are going broke. He once again recommended buying Bitcoin, silver, and physical gold as the antidote to the current crisis unfolding in the financial sphere, guys. Maybe another good time to remind you guys, keep your cryptocurrency safe too if you are purchasing cryptocurrency as that hedge. I personally use the Ledger Nano. I do have an affiliate link in the description. You can use my affiliate if you want. You don't have to use it, but guys, please do keep your cryptocurrency safe because you just don't know what is going to happen next. Here's the Robert Kiyosaki tweet. There was an emergency podcast. It is coming out today, Sunday, March 19th. Global financial crisis worsening. More and more dominoes are falling. That's what happens when you have a DCB. Deception, betrayal, and collusion in banks, Wall Street, and government. Beware, beware. And remember the other day when we were discussing Brian Brooks' comments about the banking sector? Well, here he is here in the interview actually echoing that same sentiment. Everybody is colluding, and even the heads of the big banks. Well, I mean, just listen to what Brian Brooks has to say.
I think it's pretty clear there has been a decision across the bank regulatory agencies in this administration that crypto is inherently risky and needs to be extricated from the banking system. The way the bank regulators work is that they are highly coordinated. I mean, when I was running the OCC, I had a weekly call with the FDIC chairman and with the vice chairman of the Fed for bank supervision. We talked every week for an hour and talked about what our priorities were for the coming week, how we could support each other, how our actions would affect the system. So these things are not accidents at all. I'm highly confident of that.
Not accidents at all. So, banking sector, obviously, working together. And I don't know what they're doing behind the scenes to help us. Don't know if they're even doing anything behind the scenes to help us. Let me keep going, guys. Patrick Karam here. Very rare event unfolding before our eyes. So again, maybe a call to purchase some precious metals at this point in time. Gold tempting an historical breakout versus U.S. equities. By the way, that wasn't financial advice. Lots of room to run for precious metals and friends. So, bringing up a chart here. This is the XAU, so gold to USD prices all the way back from 1931. Okay, the first signal we saw over here, and then in the 70s, the early 70s, then by June of 2002. And now, guys, and we're seeing this trend up and down, continue yet again. So panic, panic, panic. Of course, the Great Depression was the first one signaling that. There was a gasoline crisis in the 70s. I don't know about the 2002. Was this the dot-com bubble? And now what he's listing here, silver, gold, oil, uranium, and miners. Uranium's something else that I currently have in my stock portfolio, a uranium company that I've been interested in just to diversify a little bit. I don't talk about it much, but it is also, I think, going to be an important commodity moving forward. So to switch gears a bit, I know the other day, Friday, was March the 17th, and you guys were probably expecting your Flare airdrop. My wrapped Flare just arrived. This coming from Sento Sumo Saba here on Twitter. But as with Jeff here, I have still not received my FLR. So don't fret, guys. I think, sometimes it just takes time to roll out. I'm sure we will eventually get our FLR tokens, if you guys were wondering. Back to the banks, and the 186 that are facing the same risks as Silicon Valley Bank. Today, a coalition of 110 banks are now asking for FDIC insurance. Remember the other day I was talking about how 186 banks were identified as vulnerable? Well, now, this story is constantly developing. 110 banks are asking for FDIC insurance on all deposits for 2 years. They argue the guarantee is needed to avoid a wider run on the banks. Doing so will immediately halt the exodus of deposits from smaller banks, stabilize the banking sector, and greatly reduce chances of more bank failures, the Mid-Sized Bank Coalition of America said in a letter to regulators seen by Bloomberg News. The collapse this month of Silicon Valley Bank and Signature Bank prompted a flood of deposits out of regional lenders and into the nation's larger banks, including JP Morgan Chase and Bank of America. Customers spooked by the bank failures were taking refuge in firms seen as too big to fail. So what is happening here is exactly what they want you to do. Take your money out of the small banks and pop your cash deposits into the big banks, transferring that wealth. Obviously, this is not going to be good for smaller banks. Notwithstanding the overall health and safety of the banking industry, confidence has been eroded in all but the largest banks, the group said in a letter. Confidence in our banking system as a whole must be immediately restored, it said, adding that the deposit flight would accelerate should another bank fail. So this is kind of a banking crisis within the banking sector. When we did see the banking crisis in 2008, it was a lot of big banks that were going down. Now we're starting to see something a little different here. Triggered by this whole idea that these banks were tied to cryptocurrency, and they shut down. Anybody who was looking to purchase these banks were already told that the crypto part of their business is not going to be part of the deal. So this got us scratching our heads. Obviously, that means they want us out of cryptocurrency, and obviously that means we should probably buy cryptocurrency, right? That's how I look at it. If they don't want us in it, obviously that's the thing to do. Banking law prof here, J.W. Verrett posting this: if you have some money at anything but the 5 largest banks, withdraw it now. But he's saying, he's giving you some different advice here. Put some into Bitcoin and Ethereum with Fidelity or Coinbase. Self-custody is better, but until you're schooled up on that, just stick with Fidelity and Coinbase. Now, again, guys, at this point, I'm very, very skeptical, not only where I keep my cryptocurrency, but where I keep my cash balances. And again, I just mentioned it, but probably not a bad idea to mention it again. I think self-custody is a better solution. And he's even saying that. But, if you really don't know what you're doing, keep it with Fidelity or Coinbase and put the cash you need at JPM, Citi, or Bank of America. These are bold statements, guys, coming out from pretty prominent figures in the space. When these people talk, like J.W. Verrett, he's had a lot of opinions on the Ripple SEC lawsuit too. He's a lawyer. I tend to listen because these guys are very well versed on the topic. He's retweeting out Balaji's tweet here. Just as in 2008, the bankers lied. This time, the central bankers, the banks, and the bank regulators have lied to all dollar holders and depositors. This isn't your typical fractional reserve situation. The problem is that there isn't enough in the archive. So just bringing up some articles here. FDIC worried about growing unrealized losses in U.S. banks and bond portfolios. I will link all this in the description if you guys want to go over it in more detail. Here we have some unrealized gains and losses on investment securities, okay? Held to maturity, that is the blue here, and the gold is available for sale securities. You guys can see that inverse relationship that we're seeing within the last few years here. Federal Reserve weekly remittances to Treasury. Take a look at that, guys. Weekly remittances in the negative, and then the cumulative remittances here. A lot of data to go through here. And then unrealized losses lowering tangible equity capital. So another graph just demonstrating something similar here. At June 30th, 2022, the tangible equity capital ratio at CBOs fell to 8.7% as a result of mounting unrealized losses on AFS securities, which totaled 1.5% of average assets. At year-end 2021, only 4 community banks had tangible equity capital ratios below 5%. That number increased to 333 on June 30th, 2022, indicating less ability to sustain economic shocks. So guys, this is where we're at here. Another funny meme by Andy Schechtman. You are here. And I think that this really spells it out. The $1 reserve note redeemable for 1 ounce of gold. Then we have the $1 based on promises, government promises. I guess I should mention this. This is going way back here, but a coin actually tied to precious metals. And guys, this is where we are here. $100 trillion with Jerome Powell's face on the bill. But where do we go after that? Yeah, people are not going to be happy once this great reset is complete and people's money is essentially worthless. What this is suggesting, I guess I should explain this, is that, the dollar is being devalued at such a high rate that people are just going to go crazy. Forever Patriotic down here also bringing this up. Back in September of 1920, okay, you could remit German marks to buy an ounce of gold, and this is how many you needed. 1,201 German marks, that was the fiat currency at that time, for 1 ounce of gold. By only just over a year later, this is how many German marks you needed for 1 ounce of gold. 87 trillion. Is that trillion? Yeah, that's trillion. 87 trillion German marks. The German hyperinflation occurred over a period of several years. I'm sorry, this is 2023. So sorry, 3 years. This is how many you needed. Nevertheless, the hyperinflation that we saw back then is slowly occurring today. And I know some people are probably thinking, it'll never happen that way. I'll be safe. I'll, just keep my money in the bank and hope for the best. Well, then it's on you. All I'm saying, guys, is to safeguard yourself. It doesn't hurt to diversify. I'm also letting you know what I'm doing, not keeping high balances of cash. I'm not taking out all my cash from the bank, but I am keeping enough to operate, operating costs like my bills, my electric bill, my gas bill, so on and so forth. Another astute tweet here posted by Digital Asset Buy from Ryan Selkis. Okay, here's just a screen grab of this. Congress should oppose any and all efforts to ban or restrict the use of personal possession of Bitcoin and other digital assets, because if this is what they want to do, guys, then our cryptocurrency isn't even safe. Oppose any and all efforts to unfairly target or impede the development, accessibility, and security of Bitcoin and other digital assets. So he's saying Congress should oppose any bills that would, in fact, try to seize our cryptocurrency. He goes on to say there are a lot of Americans who would like Congress to explicitly guarantee that it is illegal for the executive branch to seize Bitcoin or other cryptos, gold and other commodities, and other financial property without due process. I am no longer confident private property seizures are impossible. And so now part of the theory is that this money, guys, if these banks do in fact collapse, part of this money, or in fact, a lot of this money, as per Balaji Srinivasan's prediction here, is going to go into Bitcoin. So, alert, alert, here is another prediction. Balaji Srinivasan says hyperinflation is happening now and makes $1 million bet on Bitcoin, assuming the price of Bitcoin is going to exceed $1 million. And get this, guys, he's putting in a time frame 90 days. Srinivasan is an angel investor, tech founder, and a Wall Street Journal best-selling author. He is also the former CTO of Coinbase and a general partner at Andreessen Horowitz. So this guy has got some credibility, and he thinks Bitcoin is going to go over $1 million in 90 days, predicting it'll reach this price by June 17th. The wager was initiated on March 17th, so he's betting on this, guys. When synonymous Twitter user James Medlock offered to bet anyone $1 million that the United States would not experience hyperinflation, a few hours later, the former Coinbase executive accepted the bet. So it is happening, guys. It is on like Donkey Kong, as they say. Under the proposed terms, if Bitcoin's price fails to reach $1 million, Medlock would win $1 million worth of the dollar-pegged stablecoin USD coin or USDC and 1 Bitcoin. In the same way, if Bitcoin is worth at least $1 million by the date, then Balaji can keep the 1 Bitcoin and the $1 million in USDC. So there is, in fact, a lot on the line here. I am moving $2 million into USDC for the bet. I will do it with Medlock and one other person, sufficient to prove the point. See my next tweet. Everyone else should just go buy Bitcoin, and it'll be much cheaper for you than locking one up for 90 days. I see what you're doing there. So, I mean, I can see his theory here. Banks collapsing. I guess it really is going to depend what happens in the next 90 days. If there is this, growing lack of confidence in the banking sector in the United States, I can see people pulling out their money, as Ryan Selkis is saying. Or sorry, no, it wasn't Ryan Selkis. It was It was J.W. Verrett. He was saying, pull out your money, put it into the big banks, put some into Bitcoin and Ethereum. I think the cryptocurrency market will actually rally if this in fact happens. Not everybody is going to be putting money into the banks. They're definitely going to find hedges like cryptocurrency, hence how this could in fact occur. And on the periphery, there's obviously going to be the need for a mechanism to transfer this value. All central banks are using the XRPL. This coming from XRPL Captain here on Twitter for testing the system before they go live once they are ready. The flip the switch moment that we have all been talking about. And, the reason I'm talking about all these things in this particular video, guys, is because this is going to create, we're assuming it could create a perfect storm for all this to occur. Again, the ISO 20022 standard going live, real-time payments, a banking collapse, the possible end to a Ripple lawsuit. All these things happening, people probably going to be clamoring to get into Bitcoin and other cryptocurrencies. Well, we're going to need to move that value somehow. This was a post from David Schwartz from back in November of 2017. The main limiting factor right now is everyone having enough confidence that the system is going to work correctly and that they're willing to flip the switch and let it make large irreversible payments without intervention. Now, again, this was from several years ago. We have come a long way since then. But notice that the fact that he actually uses the term flip the switch. FedNow is going live in July of this year. FedNow is a multiple payment rail platform. So guys, I think that this could have, some effect on how money moves. I think, especially if we do see the banking sector collapse in a more meaningful capacity than we've already seen with the three banks. There are dozens of vendors that will be available to clients. Here are a few Ripple customers and XRP-enabled options. So we were talking about FedNow and we were, debating some points there. Is it going to run on Ripple? Is it going to run on Cypherium? And so, there's a lot of evidence to point towards Cypherium. There could be some Ripple and XRP components to that. But here's the other thing that I think we should be paying attention to. Look at all the Ripple partners that are already on the FedNow website here, okay? We've got FIS, BNY Mellon, CGI, just to name a couple here, Temenos, Valente, Finastra, Fiserv, Form3, MasterCard, ACI Worldwide. So guys, lots of Ripple partners already signed up to run on FedNow. How close until this becomes a reality? A $1 million Bitcoin in 90 days. So mid-June, guys, I was reading somewhere that would actually be injecting, I think what they were saying was Bitcoin market cap would have to go up to $18 trillion. So, if we're looking at the current total crypto market cap is at 1.1 trillion. So Bitcoin market cap would actually have to be 18 trillion. And right now, Bitcoin market cap is roughly at 527 billion. So what would that mean? We would have to do 18 trillion divided by 18 trillion divided by 527,566,823,133 equals about, it would have to increase by about 34.11x. Okay, that would essentially get Bitcoin up to $1 million per coin. Now we got to take into account, guys, considering the money supply is worth what it is today. Think about that German chart, right? The German marks, the hyperinflation, how it took 87 trillion German marks to buy 1 ounce of gold. If you think about it in that way, and if the US dollar is going to be hyperinflated to an equal or similar value, this is certainly not off the table. I mean, we think of dollars in, the classical term, but I don't think we can, in some cases, I don't think our brains can actually get wrapped around the concept of, a dollar being so hyperinflated that you would need 87 trillion of them to buy 1 ounce of gold. But even if we just take these numbers, and this is what I found interesting, bringing up the market cap 34.11x, I mean, all things considered, if we want to consider all things equal, where would that bring XRP price? If we take the price of XRP right now and we multiply that by 34.11, that brings us to roughly $13.43. Bringing this classic Fibonacci here on the chart. Guys, I'm not making this stuff up. If XRP were to complete a full Fibonacci, that's pretty damn close. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.